Hello and welcome to your daily news and information update. Today's topic, the post-crash economy. The economy today is in no better or even different situation than it was during the past few years. As the stock markets corrected violently over the past year, they began to shed excess money. The Bush administration then intervened and began pumping money into the system to prop up its instability. The Obama administration has continued this tradition of pouring good money after bad. The result has been a so-called recovery of share prices, but the instability continues and the rest of the economy was essentially overlooked in favor of the stock markets. Sterling Newberry of FireDogLake.com points out that private money is rushing back into oil, driving up prices and increasing speculation to pre-collapse levels. When oil and share prices collapsed, money fled into treasury bonds, but that money is now flowing out and back into the private sector. Much of this speculation is essentially being done with government-backed funds, as it was the government which paid the tab for over a year, allowing corporations to profit for themselves at taxpayer expense. There are several arguments as to the end effects of all of this relocating capital. Some believe that the government is crowding out private investment. Some believe that the government's backing of corporate losses is encouraging more investment, and others contend that all of this has just created a massive dislocated bubble, which will itself correct violently in the future. Regardless of which school you belong to, the fact remains that at some point the government is going to have to raise interest rates and stop frivolously accumulating debt. The United States government cannot possibly continue to be the proverbial Atlas, perpetually supporting the columns of the earth. When this grip is either released or compromised, there is no telling what could happen to the overall economy. However, we do know that the economy has once again located too much of its money into a small circle. Most investment is in banks and oil, while the rest of the economy is bone dry and searching for some sort of capital liquidity. This is a recipe for disaster, a recipe for a return to the recession of 2008 and the collapse of 2009. On behalf of concerned citizens, I'm Craig Harrington. For more on this and other related topics, please tune in daily to economyincrisis.org.
Wake up, America! Open up your eyes! Wake up, America! Wake up!